Hi everyone, so welcome to Investing for Value. So I recently got requests to look at Lyft and Uber, so why not just do them both since they were so widely compared. And when it comes to like choosing an investment, we kind of just like think, should we invest in Lyft or should we invest in Uber? So this is why I made this video, so it kind of just like makes me look at it, gives you information as well. So it kind of just helps us both decide because I kind of like look at Lyft and I kind of think, oh, this is a smaller player, it's growing quicker. Is there a hidden opportunity where it can just get one up on Uber? And also, but at the same time, I'm looking at the whole fact that Lyft is only in US and Canada, while Uber is in more of a worldwide sense. And it's also diversified itself into a more like service type of industry as well. So let's look at things and let try to come to a conclusion at the end of this. So Lyft is trading at $49.92, giving it a valuation of $14.86 billion. Currently holding cash or cash equivalents of around $3 billion, which isn't too bad. It gives them a lot of running room in terms of what they can do. Though, let's look at the revenues and let's look at the losses, and then that might just give us a better idea of how things are going. So in terms of revenue, the recent quarter that's finished, it hasn't been released yet. It's going to be released this month. So let's look at these things. Like number wise, revenue has grown 63% from 584 million to 955 million, which is impressive because you're looking at the revenue growth and it's great. But what's not so great is the losses. Like it's grown, the losses have ballooned from 249 million to 463 million. So when your revenues are growing slower, rather in comparison to your losses, that's kind of like a worrying picture, right? Because you're in essence like using more expenses, whereas when you're at this stage, you're growing quite large, and you already, this is a company producing billions in revenue, looking at about 3 to 4 billion in revenue. Yet losses aren't being really stemmed. So that's kind of why they're looking at restructuring right now. So which kind of leads me to look at things and considering that these guys, if they're looking at restructuring right now, they're saying things aren't heading towards the direction that we want them to be heading. Competition is very tough. And we need to restructure everything. We need to fire employees. We need to hire in different spots. We need to up our game. So in that sense, I'm not too sure. Like the quarter that's just about to come out this month, if it's going to be good or bad. I'd say it sounds like it might be a bit more like negative. I think the losses haven't been stemmed at all. Um, like you wouldn't necessarily be trying to do something too dramatic unless things didn't look as great. Like they could just slowly make changes, but it doesn't sound like they can slowly make changes now. It sounds like they have to make changes pretty quick. And especially with this competitive industry, things are changing all the time. So in terms of like what's about to come out, I wouldn't say I have a lot of faith in investing in this company right now. Like regardless of valuation, if you're investing in a company like this with uncertainty, it's losing a lot of money. It's kind of difficult. So based on that, you can already see that I'm already favoring Uber a little bit, particularly at this part here. Uber's going to be profitable at the end of 2020, and that's a major part about a company. The minute you can be profitable, that means you can fund yourself. It means what you do is sustainable, and that's the ultimate power. Because if someone's constantly losing money to compete with you, and you're earning money while competing, then there's no problem with that. And given their global position, their dominant position in a lot of markets, I would say Uber's looking very strong going forward. Um, so let's just move on to Uber now, and then we can kind of tie the two two companies in after that. So Uber's trading at about $40.63, and giving it a valuation of about $70 billion. It's actually jumped up from the $28 that it was trading at not too long ago, which was a great opportunity for anyone that was buying into it. Sadly, I'd missed out because I wasn't really looking at this ride-sharing space. Uber was on my radar, but I hadn't come to the, quite looked into it that much to really form an opinion. But now that I've looked at it, I kind of feel a bit more confident about Uber, particularly with the recent announcement. Like, I wasn't comfortable looking at these companies because they've just been losing so much money. It just seemed like, firstly, you're underplaying your employees are all being underpaid. They're striking. A governments aren't necessarily happy with how some of the driving's been done, because especially what the damage that has been done to the taxi industry, and then on top of that, the margins that Lyft and Uber make, it's not enough to cover a lot, a lot of this cost that they already have, and then on top of that, it's really competitive because there's a lot of different players out there. Uber's had to, quit China, and instead it just took a shareholding in DD, whereas, it's similar position in like other parts of Asia where it's given up to Grab. So, it's kind of just looked at the markets where they can't make money, and in with the competition, they just thought, okay, it's better to just cut the losses, take a market share in that company, and just focus on the areas that they are doing really well in. So I think that's been a really good approach, particularly with all the different businesses. Like, they've sold like parts of Uber Eats around the world off, just so they don't have to just keep throwing money at something. If you keep throwing money at something, and there's competition on all sides, it's not a wise decision to just keep doing that. But now that things are starting to look a bit better, it gives me a bit more confidence, right? So like when I highlighted here with Lyft, where the losses were growing quicker than the revenues, it's actually a little bit different. Like, if you don't count quarter two, where they lost about 5 billion, but that's an accounting type of loss. So if we don't look at like accounting type losses, then the cash flow loss isn't actually that bad. Even the quarter four wasn't that bad. Like, 200 over 200 million of it was stock options. So like, if you're issuing stocks and you're counting that as part of the loss, then like, issuing stocks doesn't really have like a very like a financial outflow in that sense, because you're not really pushing out cash. You are diluting the shareholding, of course, but that comes with running a growth company, particularly something in a startup or phase where you have to entice employees by giving them stock options. But if we don't discount the figure, and we just include the stock options and everything, the loss that's really gone up is 24%, and the quarter that's just been passed has gone up 37%. So when you look at the losses, their revenue is growing quicker than their losses, which is always a really positive sign, and that's what you want to look for. So now that we've gone through that part there, I was going to go through this before I went to there, but it just tied in really well. Okay, so this is the quarter that's just been passed. This is a company that's been doing ride sharing, Uber Eats, and Uber Freight, and scooters on the side, but scooters and all that, they don't make up a substantial part. So the three main businesses is the rides, the eats, and the freight. So how are these things doing? Like, rides, 27% growth, which isn't too bad. Things are bound to be slowing down the minute you get this size. And also Uber Eats. Uber Eats is performing really well because a lot of people just love deliveries. It's just that thing that you get, that people need, and it's the one thing that people just realize that they all wanted, barring that the cost of it, every delivery can be quite costly if you order out all the time. But it's such a good convenience that's created this opportunity. And in terms of this, it is a very competitive space, mind you. Though these guys have money to burn, so at 10 billion cash in the bank, Uber's you can say they're more than they've got more than enough cash to just compete. Though they gave up Uber Eats in India because maybe that type of environment was just very complex to handle. So they thought they'd just sell it off for $180 million. So that's more cash in the bank, and then they can just focus on other markets, particularly Uber Eats, where it's just really competitive. There's just so many different players that it's not wise to just continue to burn cash if you don't need to. Like, as the CEO put, if you're not number one or number two in the markets, then it's no point being there. So I'd say it's a wise approach, particularly when you're worldwide. You're losing money on all different fronts. You just start to stem the losses, focus on making a bit of profit, and then from there you can just like launch forward, and then grow the business. Like there's other parts like freight is also growing, 75% growth, which is quite good. Like we can look at the others and it's growing at 189%, but it's such a small base that it's not going to make the biggest impact. Maybe it might over time, but for now it's still not the biggest. So I'd say like Uber Eats, it seems like that's the kind of area that you want to be growing in because that people have to eat every day, people want to use the service. Over freight, freight is probably one of the areas that no one else is hitting, so it's created a big opportunity just for Uber, and I think that's where their true margins are going to be. So the quicker they can grow freight, the more profitable this company will be. And for rides, I think Lyft and Uber have kind of recognized that, hey, it's a competitive industry, we're both losing money, but now that we understand that we're basically just competing against each other and burning each other's cash, well, how about we just lay low a bit? People can choose who they want to go with instead. Like at the end of the day, like cost is going to be similar, but it just comes down to that branding, that service-wise things. So I think after a while, these guys are just putting the prices up together, and then they're just stemming each other's losses. And these companies have slowly matured as well in terms of like they don't need they don't need to try to figure out how things are working now. They don't have to build their apps as much. Like they just have to constantly maintain and slowly improve. They don't have to build everything from scratch. So in terms of like the capital that's been put in, like they've done the hard yards. They've still got a little bit more to go, but they can start enjoying the benefits of what they've produced. They just have to like not compete too much with each other, and like it's hard not to compete. But after a while, like they'll start to just understand that, hey, this is the market share. You're not going to win more or less based on, how much you compete in terms of pricing. It's kind of like when you have supermarkets. Like supermarkets are competitive to each other, but at the same time they have their own certain customer base, and they can just keep that customer base, and they can earn really good benefits off that. So I think that's where these two players are headed. That after a while they're just going to have their own customer base. Some people just like to use Uber, some people just like to use Lyft, and then they're just going to be able to be profitable from there. But this big surprise is Uber's actually going to be profitable, which is really exciting. And it kind of just re-rates the stock. So, answering the other question, is Uber a good buy at $40? I think it's not too bad. I think in a sense, it's fairly good. If you're willing to hold, like, like given it's risen up from $28 to $40. There might be some profit taking, but that's the short term. But if you're if you can ride out those waves, I think long term wise, this is a company that's hitting over 100 billion, at least. So like I don't think you'll lose money putting buying this stock. Regarding how quick it might move, I think by the end of the year, I think the stock will be at least over 100 billion, if not closer to 150 billion. I think it's gonna try to catch up with Tesla in terms of market value, because remember Uber was going to come onto the market at 120 billion valuation, but this is like financial people talking, so these numbers are all creative in a sense. But like at $70 billion, it's not too bad, particularly if they can be profitable. Particularly like if you can start earning 1 or 2 billion next year, and then from there just keep growing that out. Yeah, like it represents a big opportunity for these guys. And also like I've always had this like perception that if the minute a business reaches its global kind of like perspective where it's just expanding, you should hire just a normal CEO. So like the minute Uber brought in Dara Karashahi, or I don't think I can pronounce his name that right, but I think it wasn't far off. But the minute they brought in that guy, he knew what to do. He knew what efficiencies that he needed to produce to get them there. Whereas Lyft is still run by the founders. When a company is still run by founders, founders tend to focus more on creativity rather than costs. Whereas if you bring a traditional CEO, they're focused on efficiencies. They're here to reduce costs. They're great when it comes to expanding, because like Lyft and Uber have kind of gone beyond that creative stage, and they are companies that need to be building in terms of efficiency and scale, because there's no more creativity that they can really start building into this. It's just more, you have to find what you're doing, and now you just have to do it really well and in a larger way. And this is what a lot of companies have experienced. Like you look at Microsoft, ever since they brought in Satya Nadella, he's been able to be that type of CEO who's got the creativity, but he also has efficiencies in mind, because he's not a founder. And he's also been at the company. He's seen everything, and he knows where to build things up. Whereas in the past, like I mean, Bill Gates built the company up, and he did a really good job. But then Steve Ballmer came in, and he was like I think, and he was in an industry like software. It's type of industry where you do need some creativity, but you also need to focus on efficiencies. I think like Steve Ballmer was a kind of like an efficiency type person, but he lacked the creativity. But ever since Satya Nadella came in, and he reignited that future prospect, the creativity. But I think Microsoft kind of needed it because it was expanding into different industries, and Uber kind of needed it to an extent. Like you needed the creativity to say we're not just about rides, we're also like people who take people can also take food. Then we can include trucks and freights, and offer our app as a service to just connect people who drive trucks with the customers. And then that creativity is done. Basically, that's the creativity. Like to say Uber needs to expand more than this right now, I don't think it's necessary. So it's about expanding rather than just thinking about creativity. You offer a really good service, people are going to use it and are going to be happy. Like the surprising thing is actually Lyft, with still its founders, you would think they would have a bit more creativity, but they actually haven't had that much creativity. They've just been focused on ride sharing, and mostly focused on the US and the Canadian market. So I think Lyft is a bit too linear for me. Like even though it's a small size player and it's growing quicker, it's a bit too linear. Like the minute like Tesla announces, hey, we're going to be offering ride sharing as well, who gets hit the most? Well, Lyft gets smashed basically in that sense, because the minute Tesla comes in and says we're offering ride sharing, they're taking a lot of customers away from Lyft. But the thing is, Uber, like they're going to take a bit of customers from Uber as well. but then Tesla isn't going to get into eats, and they're not going to get into freight, like not in that sense. Like they're producing trucks, but I don't think they're gonna jump into that space immediately. So I think this space is still Uber's for quite a while. So I think only rides gets hit. Tesla might offer something to do with food, but I don't think they are that focused on that. They're focused on getting an app out. They're focused on self-driving, and a car isn't going to, deliver food. Like a self-driving car isn't immediately going to be delivering food, because delivering food just still has quite a few steps towards it. So in terms of that, Uber Eats and freight is very much still Uber's playing ground, even if Tesla decides it wants to come into the ride-sharing space. By that time, I think these two players will have, gotten close to that profitability margin. Like Uber's already getting there, so like if Tesla announces something this year, I think Uber's not too, like it'll be in a very stable position, whereas Lyft is going to be in a tailspin. So, regarding who you would invest in, like I think you would invest in Uber because they're just so much more diversified in terms of like all the countries they're in. Like, there's not really other players that are as diversified in terms of countries. And also, they own like Kareem in the Middle East. They own a bit of Didi. They own a bit of Grab. So they've got shareholdings in companies that are also growing at the same time, and then they've also diversified into the services. So that kind of just gives them a bit more, it just lowers the risk quite a bit more. Even though the company is larger, you're it's kind of in that space where potentially the largest player takes everything, because you're squeezing the other person so much that they're not able to compete. So they're in a sense, the company you want to invest in, you want to invest in the largest player, because usually the largest one cleans up. So I would say Lyft has always been one of those companies that's been on my mind. I was always thinking, could they just like come in, take a bit more market share, because they're very small, they're very nimble, they can just head different directions. And there was a counterpoint of like, since they're small, they're not burning as much cash. But now that Uber's going to be profitable, they're not going to be burning cash into the losses anymore. So that kind of puts them in the lead of Lyft. And valuation wise, Uber's about 4.5 times of Lyft, and in terms of revenue, um, Uber's about 4 times more than Lyft, whereas that's also on a diversified base. And then also you know, their losses are only 2 times that, well, more or less 2 times that of Lyft. So when you look at the numbers, I do like Uber numbers a bit more rather than Lyft's. Lyft's isn't, like Lyft's, I just don't know where it ends. So it's very hard for me to recommend Lyft as a stock to buy, because you don't see that profitable end. You don't see, how they won't be destroyed by other companies. Like if Ola decides to come in, or another company, or say like Grab from Asia comes in, or Didi comes in. Like I'm not too sure if they will go into those markets, but you only need one extra player, or Tesla just decides tomorrow it's going to turn on its app, offer all its Tesla drivers the opportunity to drive people around and earn money. Um, and like who doesn't want to sit in a Tesla? Though I imagine like with a Tesla ride sharing, they will probably be charging a premium. So you've still got these two players who are in a sense still going to be doing most of the market share in terms of like the cheaper rides. But the minute you want to pay more, you'd probably just want to take a Tesla. So in terms of that, I think Lyft has the weakest position right now, in terms of the losses it's making. It's how diversified its revenues are. It's at the end of the day, it's not that diversified. They're making large losses. they've got enough money to last probably a year, maybe a year and a half. That's if they don't restructure and they don't become profitable, because Lyft has not told, has not given any time frame as well. The only thing that they've given is they want to be 20% margin on EBITDA, which is still it doesn't necessarily mean that much unless you give a time frame. And in it's more the profitable statement that you want to focus on. So I don't believe these guys are turning things around too quickly. The next quarter may surprise me, but for right now, I'm not seeing a really bright picture. I'm not seeing something that gives me certainty that you want to invest in this company for many years to come. But when you look at Uber, it's quite a different story. You've got a company that's stemming losses, heading to profitability, 10 billion in the bank, very diversified areas where the revenue comes in. So I kind of think, if I was to invest, which I probably might start buying some Uber, which is, you'll be like, oh, you're a bit too late, yeah, I am quite late, but I don't mind being late if there's still money on the table. And currently, I'd say at $40, there's still money on the table. As long as you're willing to be there for a good year or two, I'd say the minute this company becomes profitable, valuations head through the roof for this company. Not like Tesla through the roof, but a pretty decent return through the roof. So yeah, I can see there could be possibly a 50% return on top of the current value right now, unless we have a big market crash. And so yeah, in terms of that, I hope I answered the questions that you guys had. Should you invest in Lyft or should you invest in Uber? I'd say invest in basically, yeah, Uber. And if you, again, this is just my opinion. So if you want to invest in Lyft, go ahead. Don't let me stop you. But yeah, I think currently I feel like Uber just has a stronger position. And I just realized this is a very long video. I've kind of just let time pass. And at the end of the day, I think these are, they're they pioneered this industry, and it's made things very interesting. It's brought a lot of convenience to a lot of people. But in terms of stock investing, it's about who makes money and who can actually increase the price of their share. And right now, I'd say it's with Uber. And I hope that answers the question that, I think there's a bit of uncertainty with Lyft. I think with Uber, prices have gone up, but I think it can go a bit further. And until then, if you managed to make it this far, well, congratulations for watching a very long video. Well, I feel it's long. Unless you're watching it 2 times the speed, then it's not too bad. But even then, I congratulate you from getting to the end. And this is probably my longest video I've done since. Hopefully I'll try to keep the video times lower. But if you appreciate what I've done, like and subscribe. It definitely just helps because you want to know what you do is helping other people, and that you can just continue to just get wider exposure as you go. But at the end of the day, I just love analyzing companies. So you might just see so many videos from me. Today, this will be my 3rd video today, which in a sense, it's passion, it's motivation, it's what keeps you going, and I hope I can produce more content. So, but also, I want to make sure it's helpful to you guys. So by all means, if you have questions, just write them below. If you have any stocks, let me know. This is all what investing is all about. Getting into these numbers and then looking at these companies, and then hopefully it just brings a bit of joy, just going along this journey. But even better when it comes into a profitable part about your portfolio. So yeah, I look forward to updating you as things go. I'll update you when Lyft's quarterly comes out. Like Uber's one's already come out, so will be another 3 months before we look at Uber in terms of financials. But other things might come up, so I would say yeah, just keep posted. If you're subscribed, you'll know when the videos drop. If not, maybe see you another time. And if yeah, after that, well yeah, I'll just already passing 30-minute mark, so probably just leave it there. Good luck investing, guys.